Blow off top. BTC hits a new all-time high of almost 74k before crashing, foreshadowing a long overdue correction. How low could BTC go?
Sell the news. ETH takes a tumble after the Denkun upgrade as Sol experiences a massive pump. What does this mean for ETH?
Top signal. Meme coin Dog with Hat raises 700k to be displayed on the Vegas sphere. Why the crypto market is nowhere close to a cycle top.
Higher for longer. Higher than expected CPI and PPI prints lead to expectations that the Federal Reserve will keep interest rates where they are this week. Everything you need to know.
And a closer look at last week's top performing cryptos and where they could be headed next.
All this and more in just a moment. Last week, BTC hit yet another all-time high, driven as always by the continued inflows into the spot Bitcoin ETFs. The caveat, though, is that there is some evidence to suggest that most of BTC's price action has been taking place during off-market hours, that is, when the ETFs are not trading. Now, while it's true that crypto whales continue to play a big role in the market, it's likely that the off-market activity is related to the spot Bitcoin ETFs. It's believed that large market makers are accumulating around the clock to ensure that there's enough BTC to back new ETF shares. Whatever the case, BTC's rally to almost 74k was met by another correction, something we've seen every time it hit a new all-time high. As always, the cause of this correction was the liquidations of leverage traders who lost hundreds of millions of dollars betting that BTC's price would keep going higher. The difference this time around is that BTC continued to decline. Although it's true that BTC had record amounts of leverage going into the dip, it's likely that the continued decline was due to weakness in the broader markets. This seems to have been due to the hot inflation prints, more on those later. Now, this all begs the question of how low BTC could go. The answer depends on the time frame. BTC's daily chart suggests that it may have hit a local low at the time of shooting. That's because BTC appears to be bouncing from the Bollinger Band moving average, a key zone of support. However, it's possible that this support level is just a pit stop for another big move lower. Zooming out to the weekly suggests that BTC could fall as low as 45k before recovering. This is where the Bollinger Band moving average is, and there's lots of additional support on weekly candles. Now, in a worst-case scenario, BTC could retest the Bollinger Band moving average on the monthly, which is currently around 30k. Now, this is possible if BTC is in a bear market rally, similar to what we saw in 2019. However, it's much more likely that BTC is closer to the summer 2020 phase of the previous cycle. To refresh your memory, this was when MicroStrategy famously first bought BTC. In retrospect, it was one of the main catalysts that started off the previous crypto bull market. It's possible that the approval of the spot Bitcoin ETFs is analogous to MicroStrategy buying BTC, in which case the bull run is just beginning. Now, it goes without saying, of course, that there were other factors that contributed to BTC's rise back then, namely all the fiscal stimulus we saw in response to the pandemic. Funnily enough, we find ourselves in a similar position today, with fiscal stimulus and high interest rates boosting the economy. I know that may sound counterintuitive, but I'll explain my reasoning later. Meanwhile, if you want to trade what could be an explosive BTC recovery, then check out the Coin Bureau deals page. It's got trading fee discounts of up to 60% and sign-up bonuses of up to $50,000 on the best crypto exchanges. These deals are only available for the viewers of this channel, and they won't be around forever, so take advantage of them before they expire using the link in the description. Now, while BTC was hitting a new all-time high, ETH was taking a tumble. This suggests that Ethereum's Denkun upgrade was a sell the news event, at least for ETH. Consider that ETH had hit its highest price in over 2 years the day before Denkun. This is evidence of traders selling the news. Drilling down into the charts, we can see that ETH has fallen below the Bollinger Band moving average on the daily. This would be bearish if there wasn't an accompanying hammer candlestick pattern. For context, a hammer is a bullish reversal candlestick pattern, meaning ETH could pump soon. More about candlestick trading in the description, I digress. Now, in case you're wondering, the next zone of support that ETH could fall to is around 2.5k, which corresponds to the Bollinger Band moving average on the weekly, as well as previous weekly support. To put things into perspective, this would translate to a drop of more than 30%, a vicious correction. Meanwhile, switching to the ETH BTC chart reveals that ETH is at a critical level relative to BTC. If ETH falls much further relative to BTC, then this foreshadows ETH underperforming BTC in fiat terms. It could also foreshadow ETH underperforming other altcoins in fiat terms too. Sol is the elephant in the room in this regard. As you can see, Sol is looking incredibly bullish in BTC terms and could be breaking out of a massive bull flag on the weekly. This would translate to Sol gains of 25% or more, which could translate to a Sol price increase of 25%, assuming that BTC's price continues to trade around its current levels. Lo and behold, Sol's weekly chart reveals that a 25% rally from its current price would bring it back to its all-time high of around $250. It's worth pointing out that Sol has already hit an all-time high by market cap, which could foreshadow a correction or a continuation, depending on your perspective. In any case, this begs the question of why Sol's price action has been so strong relative to ETH. Perhaps we're mistaken, but it's possible that the answer is that many investors believe that an ecosystem of fragmented layer 2s, like Ethereum's, is inferior to a single monolithic chain like Solana. Of course, there are trade-offs to this setup, though. Ethereum and its layer 2s are reliable and secure. As of the Denkun upgrade, most of Ethereum's layer 2s are also just as fast and as cheap as Solana. By contrast, Solana has not been that reliable, with many failed transactions and even a recent outage. More about what's been going on with Solana in the description. Moving on. Now, regarding ETH's poor price action, this seems to be due to the growing consensus that Ethereum won't be getting a spot ETF of its own anytime soon. Again, you can refer to the interview our CEO Nick did with an analyst at K33 Research for more info there. The link to that will also be in the description. Now, besides possible preferences for monolithic chains, another big contributor to Sol's price action has been the ongoing meme coin hype. You may have noticed that most of the meme coins that have been rallying are on Solana. It seems that many Solana DEX tokens have been rallying as a result too. Now, the Solana meme coin that's been front and center recently is Dog with Hat, which hit a new all-time high after a campaign to put its logo on the Vega sphere raised $700,000. The crazy thing is that this was reportedly an unofficial campaign. It may not be displayed on the sphere at all. If it is, then it's likely that Dog with Hat will hit another all-time high. BitMEX co-founder Arthur Hayes reckons WIF could hit $10. We reckon it ultimately depends on whether WIF lists on US exchanges, namely Coinbase. After all, there won't be much buying if it's not possible to buy it in the first place. Note that we'll be doing a video comparing WIF to Doge and SHIB, so be sure to subscribe to the channel and ping that notification bell so you don't miss it. And while you're at it, smash that like button to give this video a boost in the algorithm. Now, in addition to WIF potentially hitting a new all-time high once its mascot is shown on the Vega sphere, many believe that this could be a top signal. For reference, a top signal is an event which suggests that the markets have hit peak FOMO, meaning they may not go higher in the short term. When you realize this, you start to realize that there have been lots of events lately that could be interpreted as top signals. For example, the rumors that Qatar will be buying $500 billion worth of BTC. Some would say that the record levels of leverage we saw on BTC recently were a top signal themselves. The catch is that these are just a few indicators, and there are many more to suggest that the crypto market has further upside. For instance, if you follow our friend Ben Cowan, you'll know that the number of views and subscribers to crypto YouTube channels is only just starting to creep up. Similarly, Google searches for things like buy crypto are at levels similar to late 2020, which is further evidence to the idea that BTC is fully out of bear market territory and at the beginning of a new crypto bull market. I suppose hitting a new all-time high was evidence enough, but there's nuance there too. More about that in the description. Now, one could argue that indicators like views, subscribers, and search terms don't matter, as each cycle is slightly different. This could very well be the case, but one thing that's been consistent over time is the relative duration. If trends are turning up now, they will continue to do so for another year at least. During that time, you can expect to see BTC, as well as most other cryptos, make new all-time highs. Make no mistake, there will be some massive corrections along the way, and it's possible we're at the beginning of one of them. This depends on what happens over the coming days. Yes, I refer, of course, to the Federal Reserve, which will be announcing its latest interest rate decision this Wednesday. More importantly, it'll be releasing its updated Summary of Economic Projections, or SEP, which includes a forecast for where the Fed believes inflation and interest rates will be in the future. To bring you up to speed, the Fed raised interest rates to fight inflation and has been keeping interest rates high to bring inflation back down to its 2% target. Inflation had been falling until late last year when it seemed to have bottomed. Last week's CPI and PPI prints suggest it could be stuck at 3%, or even rising. As I mentioned earlier, the higher than expected CPI and PPI prints appear to have caused a market correction and could be contributing to the weakness we've seen in BTC and the rest of the crypto market. If the Fed reveals it wants to keep rates higher in the SEP, there could be another leg lower. However, this assumes that the crash was due to the high inflation prints and that the Fed will backtrack on its recent decision to cut rates in the future. In the case of the former, it's possible that it's simply due to a change in passive flows, something explained by macro analyst Sam Carson. Basically, most of the investing in the stock market is coming from automated buying by pension funds and the like. Last Wednesday was apparently the last day of strong inflows from passive funds for the first quarter. This could mean another 2 weeks of relative weakness, regardless of what the Fed does. Now, when it comes to the Fed, it's unlikely that the central bank will pull a 180 on the rate cuts it's promised. If you're subscribed to our weekly newsletter, then you'll know exactly why that is. If you're not, then make sure to do so using the link in the description so you don't miss our next weekly market forecast. But back to the Fed. Now, another thing we mentioned in our weekly newsletter was the importance of the Treasury Department in this whole equation. It's believed that the reason why there hasn't been a recession in the US is because of fiscal spending, that is, government spending, which continues unrestrained. Given that this is an election year, it's likely that the US government will continue spending as much as possible to keep the economy and the markets propped up. The last thing anyone wants is a big recession or a crash, especially given how polarized politics has become in the US these days. The thing is that what matters the most to the markets is not what's true, but what investors see. If most investors believe that everything is being determined by the Fed, then that will continue to be the case, at least in terms of short-term moves. This means that the Fed could still cause a correction this week. However, it also means that this correction could be short-lived, as the fiscal spending will continue behind the scenes. And not only that, but the billions being paid out by the Treasury to bondholders will continue to get spent into the economy and the markets. These bondholders include rich people and corporations. In short then, it looks like it could be up only, barring some external shock from some unforeseen macro or crypto factor. Obviously, there's no shortage of those these days, but waiting around for them to happen has proven to be a bad strategy. And even when they do happen, the response will be money printing. And with all that said, it's about time we looked at last week's top performing cryptos. Jessica, take it away.
Last week's top performing cryptos were Jupiter, OX, Pith Network, Conflux, and Toncoin. Starting with Jupiter, its Jupe token appears to have pumped due to all of the meme coin trading happening on Solana. Jupiter also seems to have put out a teaser for what is either a meme coin or an NFT collection. Let's be real, it's probably a meme coin. As you can see, Jupe has been going parabolic since it launched. With not much price history, it's hard to say where it will go next, but it looks overbought across all timeframes. A correction in the short term would not be surprising. Next up, we have OX, whose ZRX token appears to have pumped due to the launch of Matcha, a DEX aggregator built by OX on Base, the Ethereum Layer 2 created by Coinbase. As you can see, ZRX has literally gone vertical and appears to be hitting a key zone of resistance on the weekly. In a similar fashion to Jupe, it could see a correction in the short term before heading higher, as it is extremely overbought. As for Pith Network, its Pith token appears to have pumped due to the creation of the Pith Council and subsequent governance proposals. The reason why this is so bullish is because Pith needs to be sufficiently decentralized to land a Coinbase listing, which it's currently missing. Like Jupe, Pith has been going parabolic almost since it launched. The difference is that the rally appears to be a little bit more sustainable, at least on the daily chart. Even so, a correction is likely coming sooner rather than later. When it comes to Conflux, its CFX coin appears to have pumped due to a launch of a liquid staking protocol for the coin called Shui. Sounds eerily similar to Sui. Anyways, CFX's price action has been explosive on the weekly, and it's hard to see how much higher it could go without a correction. As the saying goes though, the markets can stay irrational longer than you can stay solvent. Don't underestimate upside surprises during a bull market. Finally, we have Toncoin, whose Toncoin appears to have pumped on the news that Telegram plans on going public, i.e. listing its shares on stock exchanges. A Telegram game on Toncoin called Notcoin also appears to be gaining traction. Like the other top performing cryptos, Ton looks incredibly overbought. The difference is that it could be on the brink of an even bigger breakout on the long-term charts. But just remember that this breakout may only come after a short-term correction. If you want to know what cryptos are pumping and also where you can trade them, then be sure to join the Coin Bureau Insider Telegram channel.